NASDAQ.
Yo, what's up, guys? All right, so we're about to jump into this. All right, so let's start this off. So, like I said in the chat, I'm gonna go over basically like fundamental analysis, how I do it each month, and basically what I look at to give myself a prediction on what could potentially happen for the rest of the month, next month, right? And then of course we're still in October, so we'll also be able to kind of see what we're looking for the rest of the month, right? And next week specifically, right? So first we're going to start with the COT data because that's something a lot of people struggle with, I guess. So we're going to look at a couple of things. We're going to look at the indexes, right? Well, specifically, I'm going to just be looking at NASDAQ. And then we're also going to look at the DXY, right? So you basically, when you get on this website, okay, you come up here to select commodity. And as you can see, there's all kinds of shit in here. Whatever you want to trade, right? You just click on that. Then you come over here, right? And then you look for the contract month that has the highest open interest. Okay, so that tells you basically what quarter we're in. Okay, so we're in the December contract, which is the fourth quarter, basically of the year. So then we would click on that. Okay. For some reason, my computer is really slow today, so sorry about that, guys. Yeah, so once all this loads up, you click on interactive chart after you select the right contract month with the highest open interest. Okay, that's very important because if you don't do this shit, it's going to mess you up. Okay. So I want you guys to pay close attention to how I do this and what I explain. Okay, because it's not as complicated as many people think. It's complicated to the new trader because they already got a million fucking things going through their mind anyways. You know what I mean? So we're gonna clear this whole COT situation up so then you guys can go in each month or every like 15 days, every half of the month, right? Or like I said, the start of the month, and you could just dive into this shit and get a feel for what it's looking like. So then you can use that to verify your bias, right? What the hell's going on? I don't know why that's giving me that message. Hopefully we're good now. Anyways, so yeah. So when you get to this chart, right, this volume thing here, this purple line, it's called open interest. Okay. And open interest is important because if there's a drop in open interest, that means that smart money, if it drops and it's like obvious like this is a big drop here. Okay. Based on what we're looking at. So if there's a big drop like this, the percentage is like from 5 to 15%. Preferably you could do, like a 8 to 15% drop in open interest. If the commitment of traders line, the commercial line is above the zero line, and we get a drop in open interest at a time where price is pushing into a higher time frame discount array, also coupled with seasonality, if there's a bullish seasonal tendency, that is a dandy of a setup, right? Or a dandy of a like fundamental driver for bullishness, because a drop in open interest of 8 to 15% is showing that smart money is lessening their short positions. Okay. So we're going to look and see these drops here and look up at the chart, right? And look what it caused, right? So there's a drop in open interest here. Okay. And when that drop of open interest, when that drop in open interest happens, okay, look at what price is doing here. Okay. Price rallied higher as the drop in open interest occurred. Okay. So that drop in open interest, as you can see, it led to a bullish run. Okay. Short-lived, yes, but it was still a bullish run. Okay. Come over here. You see this drop in open interest. Remember what I said, 8 to 15% drop in open interest. How can you calculate that? How can I calculate that, Christian? Right? Okay, look over to the right. When you hover over this, you could see what price level it's at, right? Or what number it is on the right side of the axis. You look at that where it started, and then you go down to the drop, where it dropped to. Then you can calculate what that percentage was. Like, what percentage of a drop was this? Was it above 8 to 15%? If it was, and we are pushing into a time where bullish seasonal tendency is occurring, with the COT data and the commercial line being above the zero line, okay, and we're pushing into a discount array, that, like I said, that is so overwhelmingly bullish, it's like ridiculous. Okay. And that's just the way it is. You know what I mean? Like I said, this is an important factor here. This open interest is because when it drops and we're going into an area where we can anticipate bullishness or a bullish seasonal tendency, and the COT line, which we'll pull up in a second, is above the zero line, that's showing you smart money accumulation of buys and lessening of short positions. Okay. And then the opposite is true for, like a bearish scenario. Okay. Like we'd be, maybe we were bullish, right? But we're moving into a bearish seasonal tendency. If we see a rise in open interest, while the COT line is below the zero line, and we're going into a seasonal tendency that's bearish, and we're pushing into a premium array that we might consider a reversal from, or a bearish move to happen from, that is a dandy of a bearish scenario fundamentally. Okay. So you can start to quickly see how you can merge these things together fast. At first, any new trader is kind of like, what the fuck do I do? Like, all this shit seems confusing. Like, they're trying to catch their footing with a model and just price action alone. Then you go and add on all these extra things. Their head starts spinning, and also their expectations are, I saw all these people getting rich like fast. So then they try to do this shit so much and bombard themselves with so much information that they end up crashing and burning and losing money, not realizing that they're basically going into this war ground with no experience or a plan or wisdom, and just shitty expectations, like an overwhelming excitement, right? Which is not a bad thing, right? Excitement, it's a good thing. We should be excited to do this stuff. But you got to be prepared. Like, if you go into war just because you're excited with a fucking water gun because you don't know that you need to get real bullets because you weren't told that that's what's required, you're going to get your head blown off. So that's the same shit with this, so you got to be prepared. And this type of stuff helps you solidify bias, helps you trust your bias, because why should it go up? Why should it go down? Right? Aside from the technicals, aside from fair value gaps and order blocks and institutional order flow, right? Because that's all needed, right? But you can add this other stuff on top of it to really, really trust yourself. And it takes time, okay? But you got to look at things like this. This is something you'll have to practice, okay? This commitment of traders isn't a be all end all, okay? It is a piece to the machine, okay? It's very beneficial, but like ICT says, you only need, so there's commitment of traders, interest rates, seasonal influences, then there's like interest rate differentials, and there's just a bunch of different things. Out of those four things, if you have two things that line up, like say interest rate markets and seasonal tendency, you could just stick to that. Okay. Having all of them together and being able to fluidly merge everything together, that is like the highest level. Okay. But that doesn't negate the importance of these other things. All right. It doesn't make, oh, I have seasonal tendencies and interest rates there, but I don't understand COT. So I guess I can't do fundamental analysis. That's just a fallacy. That's a lie. That's ridiculous. That's not even what ICT says. You don't need to know everything. You got to remember that. You don't have to know everything. You have to find what works with you, what makes sense with you. And then over time, with experience, you'll get more comfortable with, implementing this stuff. Okay. But yeah, so to review, right, because I know that might have went over a lot of y'all heads that watched this on the replay. Basically, when you're looking at commitment of traders, what are we looking for, right? We're looking for open interest and that commitment of traders line, trying to understand what the hell is going on there. And it helps us understand what they're doing, right? And we'll dive into a little deeper study with this commitment of traders like chart real quick. Okay, let's pull this up. And again, my computer is like being hella slow, like, so I don't know what's going on with that, but I apologize. So yeah, what you just saw me do there, I pulled up the commitment of traders. Again, I went here to study, and then I scrolled down to commitment of traders. And I clicked on it, and then I selected just the commercials because none of the other shit matters. We don't give a fuck about any of that. I don't care about small specs. They're always doing the opposite anyways of what the commercials are doing. They're basically taking counterparty to smart money. You know what I mean? And we're not trying to be counterparty because they're losing their ass. Like, you know what I mean? So we got to just focus on this. Okay. So remember what I was saying here, right? Remember what I was saying when you see these drops in open interest, right? We want to see the commitment of traders above the zero line. Okay, if it's above the zero line and we see a drop in open interest, that generally is a bullish sign, especially if we're going into a bullish seasonal tendency and we're hitting a discount array. So you can clearly see that here. Okay, how it dipped lower, it was above the zero line right here. This is the zero line. Okay, it was above the zero line, drop in open interest here, 8 to 15%. All right. And you can see it punched lower. What was it punching into? A discount array. What is the specific discount array? Well, that is the low. A low is a discount array. Previous lows, significant lows like this, are a discount array. Okay. So there's one bullish sign, two bullish signs, sweeping this and aggressively repricing, shifting market structure. That's three. Even if you didn't catch it down here, find any use of this, you would have been able to reasonably anticipate this going higher. Also, at this time, there was hikes in interest rates, okay, across the across the world, essentially, right? And although that is a bearish sign because stocks don't like rising interest rates, there was slight excitement happening in here over that. And that's okay. And the COT data here showed us ahead of time that that was going to be the case. Does that mean it's going to be doing bullish shit for months? No, because fundamentally, okay, we got to understand how to piece these things together. Fundamentally, rising interest rates are negative for stocks because they just don't like it. I don't know the whole ins and outs of why that is and all that shit. You could go look that up if you want. We just have to know how to apply the data. Okay, how do we apply the data to come to a decision on price and our bias? How can we trust our bias using this information? And that's basically what I'm touching on right now. Okay. But yeah, so you can kind of also see how this dip in open interest here, although that is a bullish sign, I mean, you could still see, I mean, it was still kind of flirting with that zero line. Okay. Eventually it dipped lower, right? So this would be a time when COT data wouldn't be as clear. And sometimes that occurs, but like I said earlier, there's other things that we can use in confluence to come to a decision. Okay. We know that rising interest rates is bearish. Okay. It's a bearish signal. This was in consolidation. Okay. This didn't want to move. Okay. I believe from, what is this, June or whatever. Let's go see what seasonal tendency does in June. Okay. June going into July for NASDAQ. Let's go see. Again, my shit's hella slow right now. I don't know why. There we go. All right. Come on. So I'm not 100% sure why this is taking so long. All right, let's try something else. Let's go to, oh, and then it closed, huh? Okay. All right. So June and July. So right off the bat, you can look over here also on the US dollar. From June to July, what do you see? Okay, so this black line is the most important line because it has the longest time, it has 35 years of data. These other lines, they're like confluence. Okay, so we want to see them agreeing with this black line. Okay, so what do you see here for the DXY? Okay, going from June to July and even up into August, you see a bearish seasonal tendency for the US dollar. So what did we just look at on NASDAQ? What did we just see? What did we just see here? We see from in June and July, there was a drop in open interest. COT data was falling. So remember, we said this was not that clear, but we see the drop in open interest. So because this COT data right here wasn't really falling completely in line because it was kind of falling a little bit, but it was flirting with this as this drop was happening. Does that mean this is useless? No. Open interest by itself is a huge indicator. Okay. Drops in open interest are showing smart money lessening their short positions. If the drop in open interest is from 8 to 15%, okay, that's a very important thing. Okay, it's very, very important to understand the deeper knowledge in this stuff. It's okay, we've got a model, this and that, you know, this isn't something that we can do and just pick and choose what we want to focus on because that's what we want to focus on. Like that's like being at a job deciding that you're going to do whatever you want to do and expect the employer to pay you. That's not how this shit works. So it's the same with this. This is a business. You have to understand certain things if you want to reach certain levels. Okay. And things like open interest are stuff you want to study, you know, and yes, it takes time. It takes time. It's going to get in the way of shit. Your back testing and all this stuff is going to get in the way of things that are fun in your life. And guess what? You have to accept that. like you got to accept it, right? But before I go on a tangent about, you know, that type of stuff, let's stick to the topic here. Okay. So open interest was falling here. Okay. Price ran down below into a discount array at a time when DXY has a bearish seasonal tendency. So now, with that being the case, with a drop in open interest, a dip into a discount array, a bearish seasonal tendency for DXY, let's go see what NASDAQ is showing from June to July, all the way to August. What do you see on this chart here? Right? Reason with it a little bit. Really look at this chart and remember what I just told you, because this should smack you in the face with what I've just shown you. And this is this year's data we just looked at. So this happened this year as you were looking at the chart trading, watching me trade, watching ICT videos, all that stuff. It was happening. This stuff was in front of you, but you were not aware of it. You know what I mean? Seeing this, hearing me explain it, I hope it makes sense. Because you can sit there and overcomplicate the shit, like the hell out of everything, and it's not worth it. You don't have to. It's simple. I hope that what I've said is simple enough. And if it's not, you have to tell me. You can't just sit in the shadows, watch me trade, and kick the shit out of the market every week. Okay, and just like hope shit's gonna happen. and change. It doesn't work like that. You can't run your business on hope. If businesses were ran on hope and praying to God that this shit was going to work, bro, every business would fucking fail. God has his place. Okay. He's there for those of you that believe in God and stuff. That's a piece to the puzzle. You only get blessed for shit that you put energy in. Okay. You only progress in things and are able to receive blessings that you worked for. It's not on a silver platter. It doesn't just happen because you want it to happen. You don't become a better whatever you're trying to be good at just because you want to become good at it. You have to put in that sacrifice and prove that it's serious to you, that you really want this shit to happen and that you're willing to sacrifice for it. Just like it's a child. Like, you got to look at any business you have as a child. Like, dude, you need to grow this shit. And guess what that takes? That takes sacrifice. It takes fucking money. It takes the willingness to sit down and learn and but limit shit that takes your time away from it. Okay. And that, you got to you got to have your own judgment on what you're going to allow this to get in the way of. Okay. That's not to say block out your whole life and just fucking, no life this shit. Although there's benefits to that. It's just, it's unhealthy to think that way. But at the same time, you have to put in the right amount of effort and time into this and understand it's going to take time. Hearing this conversation that I've just talked about and explaining this shit, that should have you thinking like, holy shit, I got some work to do. It shouldn't make you think, oh, this is too much work. Because if it makes you think that and you're like, oh man, it seems like a lot, blah, 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 then trading might not be for you. And that's the cold, blunt, honest truth that nobody will tell you besides ICT and people like me that are in his shadow, that I follow every fucking word this man says. Every fucking word. Not one thing has come out of his mouth that I have not applied to myself, my life, and my trading. Because guess what? This is serious to me. This is my life here. This is my goal, to make this shit as big as I possibly can. And nothing's going to stop that. I don't give a fuck what happens. Recession, all this fucking shit. None of the shit matters to me. All this fucking drama and shit, it doesn't matter. None of it matters. Nothing is getting in the way of this. And that's the mindset you have to develop. You have to develop that, because this shit, let's be honest, okay? This shit is probably the hardest shit anybody will ever try to do. And you don't want to overlook that fact, because overlooking that fact and casually doing this shit, you're just building the recipe of disaster, to hurt yourself, to hurt your confidence, to hurt yourself financially. It's like the analogy I said earlier. It's like you're going to war with a fucking water gun. like you want to get your head blown off if that's how you view this shit. You think you can casually do this. It doesn't work that way. There's things that need to be in place that you have to focus on. And that's just trading, right? That's just trading. That is the reality of this shit. And things like this, if you look at this, what I just explained, if you look at it like this is too much work, or if you look at like back testing is too much work, or this and that is too much work, I can't find the time to study, and all these excuses, don't make yourself suffer and even put time into this, because you're just going to fail. And everyone can sit here and try to tell you all this fluffy ass shit. Okay. But this is the reality of shit. Like, why do you think people fail? Most of the time people are failing because they don't take it serious and they quit too early. And it's too much work for me. And they're fucking lazy and they make excuses. And they do all the shit that they shouldn't be doing. And then trading gets looked at as a shitty place or shitty thing to do, or it's too hard and it's impossible and all this shit. When in reality, it's the fucking person. It's their views on this industry, and just the fucking views on discipline and following rules and just putting in fucking work and sacrifice. It's their views on that removes them from this industry. Their impatience, their shitty expectations, thinking that it's just going to fall into their fucking lap because they watched an ICT video. You know what I mean? Like, this is reality. And I've had to have this conversation that I'm having with all of you guys right now. with myself so many times because this shit is rough, dude. It's rough at first. It doesn't matter how long you've been trading, because you could be trading for 5 years, but half-assed the whole 5 years. And then, it just was like maybe 1 year of work that you put in. And we don't look at it that way because that's uncomfortable, right? It's uncomfortable to look at that harsh reality in its face. It's hard to do that. But guess what? That's trading. Trading is going to make you look at yourself. And if you refuse to do that, then there's going to be some harsh lessons you got to learn, So it's just better to accept these things. It's better to accept this stuff. Understand that, dude, there's a level of dedication, a level of discipline, just a level of, I am not going to fucking quit, that you have to develop. It's not something, and there's work, you know what I mean? There's work that has to be done. It's not, I'm just going to look at this shit, find the model, and that's it. That's not it. Yes, the model's easy to follow, the YouTube model. Yes, you can see it, all that shit. But guess what? You still got to build trust. You still got to formulate your plan. You still have to cultivate discipline. You still have to learn how to do fundamental analysis to be able to trust your bias more. Okay. As an elite trader, not as just like a fucking moderate, this is a hobby type of trader. Because those traders aren't profitable. Having this as a hobby, like I do this sometimes on the weekend. Like, dude, that's not, is that how you run your business? Because if a CEO ran their business like that, what do you think is going to happen? They're going fucking bankrupt. All right. That's the reality of this shit. And this ain't talked about enough, because guess what? People are trying to sell this and sell that, sell courses, do this, do that. As you guys have already heard a lot of times from ICT, you know what I mean? It's just the reality of it. And it's up to you to change that mindset you have. It's not up to me. I can't do it. I can't go into your brain and fucking fix that, or anything that you're battling with, help you deal with how you deal with problems. I can't get in there and do that type of work. I'm not certified, for one, but I can share my experiences. Then most of you guys that are in here know me from, know my past, even the people that are kind of new that I've had deep conversations with. Like, you guys know my past. I've been through a whole lot of shit, and I could have quit many times on this already in the past, 3 years almost. Like, you know what I mean? So it's like, it's just, you gotta change your mindset. You gotta be aware of certain things, okay? And you have to accept the fact that things like this, you gotta do. This is part of your fucking job, all right? Like, this is part of your job, okay? Like, this is part of the job description, to understand fundamentals and how they assist you, okay? And you have to pick the ones over time that you resonate with, that you're going to use in your analysis, okay? And COT data is part of that list, right? COT data, analyzing interest rate markets, which we will get to, seasonality, which we're looking at right now, okay? And then shit, there's one other thing. I can't think of it right now. But yeah, like, even just those three, you don't even got to look that far. Like, you could just look at those three. If two line up, you're fucking rock solid. If you have a bullish bias on something and you go and look at, the seasonal tendency, and you look at that, okay, it's following the bullish bias and the commitment of traders, or the interest rate markets are promoting bullishness on that asset. Cool. Now you go in and you can look for bullish scenarios to pop off the chart at you, and you can feel confident in trading in that direction. Does that make sense? So, so yeah, let's get back to this. I know I kind of got off on something, but it had to be said. Okay. It had to be said, because there's too many fucking people that are taking this lightly. Okay. There's too many, because I don't look at things like that. Like, you guys that have been with me for a while, you know how serious I take this. I don't look like, no excuse in my mind is valid unless you have a life and death scenario, or a family member dies, or something catastrophic gets in the way. Okay. No, because I've had every fucking excuse in the book besides those. Okay. And I could have easily been like, this is too much. It's too stressful. I can't do it. I've had so many fucking things thrown at me. So many things, from personal shit to outside shit affecting my life. And not one time have I ever thought, okay, I'm going to quit on myself, because that's what it is. If you quit on this, knowing you have specific goals with this, and what your why is behind why you're doing this, and you decide, oh, this is too hard, then you're basically quitting on the reason you fucking are doing this. And that goes for anything you do in life, period. And this isn't up for debate. like that is how it is. That's reality. Okay. So
No, that's facts though. And I'm gonna just testify real quick that I was taking this lightly and I was trying to make excuses and stuff like that. But honestly, at the end of the day, it's like, what are you really serious about? Like, what do you really want in life? And do you want to get it? Because we've all been through stuff in life. And honestly, I'm just sick and tired of making those excuses because I know what I'm capable of and I know the knowledge that I have. So I just got to go out there and apply it. You feel me? Like,
hell yeah,
I mean,
bro.
everybody, you know what I'm saying? And like, bro, honestly, like, we're all built differently. And I know some people like struggle with things more than others, but I mean, that's why we're here. Like, that's why we're a community. And I'm glad that we're getting back to the videos and stuff like that. Cause I'm like, bro, honestly, like, y'all are all family. And it's like,
No,
bro,
that's
like,
a
y'all,
fact, bro.
like this Discord is literally like the only people that I like talk to. You know what I'm saying? Like,
Hey,
y'all are
that's a
really,
fact.
you
Hey, that's the same with me, bro. Hey,
know
and
what I'm saying?
let me just say this, right? Because some people might be like they may get hit wrong by what I've been saying, like the tone I have. But dude, this is like
Facts.
I said, this is my fucking life. And this is from a place of care because I know how hurtful this shit can be to our psychology, just our
No,
views on
facts.
life. This shit can put you in a terrible depression. Like
This
you
is the
people
only
commit.
thing that no facts. This is the only thing that has ever made me question my life before. Like I've yeah, no, for real though. Like if you're see, you can have and that's what Christian was saying, like it's super easy. You don't need to overcomplicate it. The hardest thing is just getting that mental discipline and that psychology and
Yeah.
not being too greedy. Because
Yeah.
that's where I failed in the challenge. Like I try to and dude, I'm not gonna lie, bro. Sports betting and trading, too many things are too similar not to like relate it. So I'm gonna just say it like this: with the serious sports bettors that I've talked to that are profitable, they never chase the losses. If they lose for the day, they're done. They come back the next day because they know that there's more opportunities. And just hearing a sports bettor tell that to me, I'm just like, all right, I
So
gotta look at trading a little bit more differently.
yeah,
Because it's like you said too, you know, like for me, like I treat sports betting like a hobby. Do I make money? Yes. But am I profitable in the long run? No. But the serious and profitable sports bettor, they're literally in the sports book every single day. They're taking notes, they're watching the lines move, they're doing all these little things that I'm not doing that I should be doing in trading because I have the knowledge, I have the skills, I have the tools, I have the community. So it's like, why am I not applying that? And that's literally when it like clicked in my head. I'm like, bro, like it's time to stop playing games. Like if a sports bettor can take this seriously and make money, then I can do this with trading because I
no, it's a
have the
fact,
tools, I have
bro.
the skills.
That's a fact, and you gotta realize, right? Take like a bird's eye view of anything related to gambling. Okay, what do the professionals have in common? They fucking know how to manage risk, and they, like you said, they don't chase
Facts.
losses,
Facts.
bro. They have a
No, that's facts.
plan. They have a
They
set
keep their
plan.
bankroll set. They keep their
Yeah,
bankroll
yeah.
where it's at.
Because
They
if you lose
never
money, bro, if you lose all your money and your risk management is poor and you don't have a plan and you don't know how to manage yourself through those negative times, because they fucking happen. There's no way around it in any form or fashion when it comes to using your money like this. Like this is a this is a different game than gambling. Okay. But the similarities in terms of risk management and the importance of it, they're there. Like that is undisputed. Like that is why poker players can be professionals, because they know the odds of certain hands. If they get a certain hand, they have a game plan, they have a plan, they understand their strategy on how they're playing the game. And if they lose, they know how to manage risk. If they get a shitty hand, they know how to risk with less leverage, because guess what, they have less odds, and they understand that through experience, through having a plan, through understanding the game that they are playing, where the
no, that's
risks are,
facts.
okay, and
Facts.
how they're going to operate within that risky environment. They're not just going to wing it. They're not just, I just want to make this happen, so I'm just going to put money up and casually do it. That's a similarity there too. So there's a lot of similarities when it comes to gambling. There's a lot of similarities in the mindset, because the whole overall game, it's totally different. We have so much more leverage over a poker player or a sports bettor, because who the fuck knows? Someone can get hurt in sports betting, or like a sports team, and some catastrophes can happen that are unexpected that you can't fucking gauge. I mean, that's the same thing in the markets too. That could be a black swan event and some shit could happen, but it's more likely in the other aspects of things than it is here. Right now, though, in this environment we're in, this is an experience thing. We have to understand what we're navigating. This is a high risk environment, because anything can happen at any given time on the news, because there's so much geopolitical bullshit happening. And guess what? That goes back to what I just said. The professional understands the game they are playing. They understand risk management. They understand their plan. They have a fucking plan, and it's well written and well understood, and they have executed it continuously until it's burned into their fucking mind. Just like what we're doing here, right? I've been doing one part of my analysis that I normally do every month. This is my fundamental analysis portion of things. That is, guess what? Part of my process that I do every single month, every 15 days, a lot of times, okay? Just to make sure I'm in the right, direction, and everything, nothing's changed in the narrative over in the higher time frame, right? But it's a continuous thing. I'm constantly doing this. How like the call here, it's probably, with me explaining everything, how I'm going to do it, it's probably going to take, maybe another hour or two. But doing it by myself, it takes me 25 minutes. And how did I get to that point? Because I understand the game I'm playing. I understand my process. I've done it over and over and over. The first couple of times, yeah, it took a long time, because guess what? I was trying to fucking learn how to do this. I was trying to learn what is important and what's not important. What do I focus on? What do I not focus on? What's a sign for bullishness? What's a sign for bearishness? Given all the fundamental aspects that I've studied, right? But I've had to sit and study that. That's another thing I've had to sit and spend hours studying, aside from trading itself and the technical side of things, aside from my psychology studies that I continuously, even to this very day, have to do every fucking day. There's not one day that passes, like I said earlier, that I don't listen to something ICT has said. Every single day I'm listening to one of his Twitter spaces. I just cycle through them all just to make sure I remember everything verbatim. Like, I could listen to something he's done on Twitter and I can repeat it. Anything on YouTube, I can damn near repeat what he says as he's saying it, because I'm just obsessed. And that's what it takes. Like Grant Cardone says, you either be obsessed or you're broke. Be obsessed or be fucking, insolvent. like that's just the way it is. You're obsessed or mediocre. And that's there's no in between. Especially now, there's no middle class. So you can't be kind of good. Like, you got to be fucking great, okay? Or it's just going to be hard. The middle class is being wiped the fuck out. And that you don't need a rocket scientist to fucking see that that's what's going on in America, at least. They're wiping shit. They're wiping the board, okay? They're doing things that are going to really change our lives within the next 5-10 years, even next year, because central bank digital currencies are coming out. But that whole conversation we'll have on a different time, because we can go fucking hours talking about all that shit. Okay, but yeah, it's the same thing across the board for anything that has to do with gambling. Trading is not gambling given the information we have, okay? But the risk management, as a professional risk manager, because that's what this is. You are a professional risk manager. What is a trader? That's exactly what a trader is. They're a risk manager. They have a plan. They understand themselves. They're not going to gamble, not going to make delusional decisions because they just took a loss. They know how to manage themselves. Those are the traits of a professional. And that's what you have to strive for every day. You have to wake up, and when you look at the chart, you got to tell yourself that I'm a professional, and I'm going to fucking carry myself like a professional, and I'm going to fucking do what I need to do until that is a fucking reality. If it's not a reality right now, okay, that is what you need to tell yourself. And we could sit there and be like, all right, yeah, that sounds good, and then be motivated for a day, and then it dies out, and then we go back to doing the same shit we've always been doing, and that's fucking a dead ass cycle. And it's something everybody gets dragged into because life happens. But you got to really dig into yourself and be like, dude, do I really want this? With anything you're doing, right? And that you want to become good at, right? You got to have these conversations with yourself. And in this game in particular, like you said, dude, this shit made you question your life. This profession here, this profession that we are working within, trying to become professionals in and navigate ourselves in the proper way, this fucking type of work has the highest suicide rate because people come in with these fucked expectations. They don't ever have someone sit down and tell them the reality like we're discussing here. And they just half-ass the shit, thinking they're privileged. And since I'm learning the market, it's going to work for me. I'm the fucking big shot. Okay, I'm coming in this. Maybe they had a bunch of school shit they did really well in. Oh, I'm the one. I've been doing great my whole life. I've always won everything. Killed it in sports, did this, did that, got all the girls, blah, 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 whatever the fucking case may be. They come in here and they fall on their face. And then it makes them fucking think about their life. And then sometimes, sadly, they make irrational decisions just like they do in the market. You know what I mean? And this pulls that out of you. This is a reflection tool. You have shit that's going on in your mind that you need to fix. Study how you act in the marketplace, and it will fucking tell you what you need to work on. Because it's told me, like big, bold fucking letters, every single time when I was struggling my ass off. Even in times when I'm dealing with a losing streak, there's those thoughts, certain thoughts they always pop in your mind because we don't like failure. Who the fuck likes to lose money? Who the fuck likes to be told straight to their face that you are wrong and you lost money as a result? After you put all this fucking analysis in, you did all this work and you took a loss and then you took another trade and then another trade and then another trade and you broke your rules. Now you're feeling depressed about breaking your rules because you damn well know, because people have been saying you need to follow your rules. So you're depressed about that, upset about the fact that you got the fucking analysis wrong. Now you're questioning your life. You're questioning your abilities to do this. All these things.
Yeah, why'd you just tell my whole life story right now, bro? Like, what?
Think about this.
Watching me trade or what, bro? You watching me trade or what?
Think about this though, bro. Think about this. None of those negative thoughts are valid to think about yourself. Like any negative shit that you think after a loss, I don't know if I could do this. If it's one trade you're basing that off of, bro, think about this, dude. If you're going to be trading for fucking 10 years, even, 5 years straight, or you think this one trade dictates what the fuck's going to happen by the time 5 years passes, if you stick to this shit, do you think this one trade is worth putting your whole fucking career on? That you just took a loss? Is there not an opportunity tomorrow? Yeah. Is the market going to stop running tomorrow?
Same thing with sports betting. Like, I ain't going to stop sports betting.
It's all the same. It's all the fucking same. It's because you made a bad decision now or your analysis was off. Who gives a fuck, dude? We got to be okay with being imperfect because this is an imperfect market for us because we're human beings and we make mistakes. And quite frankly, none of us have as much experience as someone like ICT does. He has 30 fucking years of experience, dude. Like none of us have even over 10. So it's like, come on, bro. Like we're all still babies. Even though I found my place in the marketplace, I know how to navigate for me. It took a while to figure that out, bro. And it was painful. And I'm still learning every fucking day. There's not going to be a time on this planet while I'm trading. There's not going to be a time where I think I know everything, where I get ahead of myself. Because every time I did that, it caused me pain.
Humble.
Caused me a bunch of pain. Yeah, sometimes I sit there and I'm like, damn, we fucking killing this shit, blah, blah, blah. But dude, that's just because it's fucking facts. Okay. Like it's not like egotistical. It's just like, bro, y'all fucking seeing this? Like, are you seeing the calls happen in front of your eyes?
Yeah, no.
From someone that's only done this for fucking not even 5 years, dude.
Yeah.
So
but you put in the time though. I can testify to that.
It's just that's the only difference, dude. I'm not fucking some genius, dude. I dropped out of high school, bro. Like I'm not some fucking mental giant. Like, dude, I had all types of fucking personal problems, like back in the day, dude. I was not like nobody would ever like anybody that I talk to, but I don't really talk to anybody from my past because I fucked up a lot of shit. But anyone that I fucking do run into, and I tell them what I'm doing, dude, most of the time they have no idea what the fuck I'm even saying. Okay, for one, they don't even have the slightest idea what this is at all. So it's like not worth telling them. But when I do tell them and get into conversations with this, they think like they look at me hella lost. Like, what the fuck, dude? Are you like the real person? Like, are you really the person that was fucking doing a bunch of dumb shit when you were little? Like, holy shit, dude. Like, that's crazy. And they start thinking, oh, I would never be able to learn that. How the fuck did I learn it then? Because I don't have those thoughts. I had those thoughts before, doubting myself and all this shit. But remember what I just said, dude? If you have fucking flaws in your mind that are playing with you, stopping you from being great, the market's going to pull it out. It's going to show you, hey, you need to work on this. And it's going to be painful. But guess what? That's the market. That's trading. That's what the fuck this is. And again, if that's not accepted, that is what happens, that shit we're going to have to endure. If that's not accepted, again, trading is not for those people that are resistant to that. It's just not. It is what it is. It's just not, because it's fucking hard. But guess what? If it wasn't hard, if it didn't take a fucking shit ton of work to do this and a lot of personal growth and all these things, this wouldn't be worth it. It wouldn't be worth it, because how hard is it to get a job? It's not that hard. You can just go be anybody and fucking show up. You want to work, they'll fucking hire you. Do whatever you got to do. It's not hard, but guess what? The payoff's not that big either. So you got to think, right? You got to think like, okay, this is rough, but guess what? The honey pot at the end of this, bro, that shit is sweet. Let me tell you, it's fucking sweet. And even when you slightly get there, it's fucking amazing, dude. You don't got to make $1 million for this shit to be amazing for your life. You don't have to do that. Although that's what we want, that's the wrong expectation. Like ICT said, the way you get rich doing anything that you're passionate about is when you don't have to try to get rich, but you critique yourself and you grow as a person and you do what you need to do to become great at what it is that you're doing. And that's some shit that stuck with me for fucking months, still sticks to me. Like there's shit he says that just fucking put a hole in me. It just stays there, and it fills other shit for me as well. You know what I mean? Like it's heavy shit that he talks about. And that's why I don't let up with the shit he says. Because dude, this man has more wisdom than all of us. You know, he has more wisdom than a lot of people I know.
And he's a man of God too.
And he's a man of God.
Him.
And he's where we want to be. And he has the skill set. And he birthed this shit. And he's generous enough to share it. And life advice and all this other advice. Some shit I don't agree with. Just like anybody else, I won't agree with everything. But the shit that's relevant to me, that I can use, that I feel like is applicable to myself as a person, as a trader, in the marketplace, or just in life, I use those things. And that's what we're supposed to do. We got to be independent thinkers. We got to be independent thinkers. We got to have our own opinion. We don't have to agree with everything he fucking says. But that at the same time, that doesn't mean close your ears to shit because you have a different opinion. Because there's things that we need to think about. There's things that he talks about that aren't talked about because they're uncomfortable to think about, like all the world events and, different shit. But we got to be aware of those things, because guess what? We all are affected by it. Okay. So take some stuff with a grain of salt, of course, but at the end of the day, you know what you resonate with as a person. And that may not be something I resonate with, or it may not be something that's important to me, right? Or may not be something that's important to ICT, or whatever the case may be. But maybe it's important to you, right? That doesn't mean it's not important, right? Like you got to take things and piece together your own puzzle, okay? And just same with your process. There's a process to doing this stuff, and you got to have it structured. You got to have it written down, organized in a PDF. Prove it to yourself that this is important, and that's your business plan, and you care about it. Prove it. Don't just fucking write it on a random ass piece of paper and throw it in your fucking closet. like bro, like what the fuck? Think about what we've said so far. And if someone does that and they treat their trading like that, that's why they get fucking beat down in the market. That's why it happens. It doesn't reward that stuff because you're not prepared. You're going to war with a fucking water gun, and it's gonna mow you the fuck down. And it is what it is. We gotta be sharp with this shit. We gotta be, because if we're not sharp, we're not going to have any effect. It's just going to be negative. And then also, if we don't put work into work through those situations when it is negative in the proper way, then that shit's also a barrier that we have to face as well. And then, you know, it just piles up on top of each other. And then just the toxic negative thinking, if it continues and continues and continues, it gets harder and harder and harder. Why? Why does it get harder and harder and harder if we don't try to work on things quickly that we notice, you know, are affecting us? Because it becomes a habit in your mind, because that's how things are. When we do something over and over and over and over and over and over and think the same thing, same question. Like if you take a lost question in your life, take a lost question in your life, take a lost question in your life, sooner or later that becomes a habit. And then when you try to change that, now it's harder to do it because you didn't bite it in the ass right away. You just let it happen. And now there's thick neuro pathways in your brain from that habitual action in thought that makes it harder scientific, just from a biological level, to change your ways. And that's just how it is with everything. But it's also relevant in trading. Okay? It's relevant in trading. It's very important to understand this. Okay? So when certain shit happens, okay, when you're starting to deal with certain shit and you notice something that you did wrong, that's why you fucking write in a journal. You have to take these things serious. Because guess what? A business, what does it do? They're constantly documenting everything. Why? Because they want to know where their weaknesses are, where they can improve, how they did this month, this week, today, okay? How they can improve on that. Where are they fucking up? Where can they improve? If they don't have the fucking data written down clear as day, like it should be in our journal, organized, okay? How the fuck are they going to go back and fix that? They're not. They're going to continue to do what we just talked about. They're going to do something, have the same thought reaction. Do the thing, have the same thought reaction. And it's going to be a habit, and it's going to be rough to break that. And some people don't accept this, you know, which is why trading is sometimes the hardest shit ever, because they don't want to accept that they are imperfect, that they have things that they can improve on, and they can accept that and tell themselves that without fucking hurting themselves and degrading themselves. You know what I mean? Like, this is a skill right here, what I'm saying. This way to think, how to articulate yourself mentally, this is a skill. Like it's another skill you got to learn. There's fundamentals, psychology for yourself, okay? Dealing with losses, technicals, understanding how to piece all that shit together, develop a trading plan that you are going to follow, develop the discipline to follow that trading plan, okay? There's more things to trading than just a model. All right. And that's why there's so many people that have the same information. They have all the same shit and people get different results. It's because there's weaknesses that they're not accepting and working to improve on. And their process a lot of times is flawed. Their risk management a lot of times is flawed. Their understanding of the markets is flawed and infantile. They haven't done the back testing. They don't want to back test. You know, the list goes on and on and on, right? But mind you, it's just it goes back to what I was saying earlier. It's a dedication thing. You got to understand this takes time. This takes time. It takes dedication, and you got to have a fucking plan, and you have to really accept it and work with it. Okay, every single week. No excuses, because excuses don't get you paid. Excuses promote procrastination, and procrastination is a killer of dreams. Okay, so if that is the case, you got to look at how things are happening, right? With what you're doing, right? If there's certain things that are occurring, and there's things that you are willing to put on your sleeve and admit to yourself that you need to work on, then you got to just work on them, bro. Just everybody work on these things. Spend the time. Treat yourself with the importance that you deserve. Okay. What do your goals and what does your why mean to you? Okay. You can't just say that you can't just set goals and then, you know, or have a plan to get, you know, all this money and then just not have a structure to it. It's just, it doesn't work that way. You can't build a fucking building just off of what you know, like what you think should happen. No, dude, like there has to be a systematic approach. And with this, since it's so technical and it's so personal, and there's so many things that can get in the way that we are not aware of at first, we got to be very diligent with the things that we're doing, very thorough. We have to be intentional about the shit we're doing, from back testing to, you know, daily logs. What are we looking for? What did we think at first was going to happen versus what occurred? Okay. What happened? Explain it to yourself. How did you feel? If you took a loss, how did you feel? If you felt like shit, how can you work on improving that? Okay. So you just got to dissect this stuff and do it with care. Do it with like an urgency and an energy of like, you know, I really, really like this stuff. And if you cannot pull that out of you also, that I enjoy this type of stuff, or, you can't find joy in it, that's another thing you got to think about. Because bro, if you can't do something long term and be a professional if you can't fucking stand it. Okay, like if you can't stand opening trading view and looking at the chart and spending an hour or two or however much time you spend on studying, if you can't do that and enjoy it, or just suck it up, like, then you gotta think about this stuff. Because if you don't, and 5-10 years passes and you wasted a fucking bunch of money and time, that regret is going to be fucking irritating, and you can't get that back. Just like any regret, you can't get it back. So we got to be intentional about what the fuck we're doing in life, and especially with what we're doing in trading, because this has financials attached to it, bro. And it has time attached to it. It has a dedication and sacrifice attached to it. So we got to really think about this. It can't just be like, oh, it's cool sometimes. Like, no, dude, like, it's a business. And just like any other business, if you can't give it your all, and if you can't take it serious as it should be, it's going to lose. It's going to lose money. Just like most businesses that start, they fail. Why? Because most people aren't as driven as they think they are. Or they're not as interested in that business as they think they are, or they're not mentally ready for the struggles and battles that they're going to have to face, that business is going to present to them. So they give up, or they just tap out because they lose money. You know what I mean? And this is a reality of business, right? What I just said, that's a reality of business, and it's no different to what this business is and what it requires. So yeah, I always get into some type of rant when we're on these calls, but I do want to get back to the analysis portion of things. But I hope you guys didn't take anything that I have said as maybe offensive or as, like degrading or anything like that. I'm just trying to be the real voice, just like ICT is. That's who I learned from, and that's the perspective I have. So you should not expect anything less than realistic, blunt ass truth, because money is on the line. Okay, money's on the line, and we have to understand that. Okay, because that has an effect on us, and to be able to weather the storms this industry throws at us, we got to have the right perspective. We got to have the right expectations, and we just gotta know what the reality is. Because you don't want to be in a delusional lie, strolling through this battlefield of, financial instruments. Okay. Like, cause it's bloody. It gets bloody out here. All right. You know what I mean? So, yeah. So I hope you guys got some value from that. So yeah, let's move on back to this so we can, get this whole show on the road, right? Get this skill set understood so you guys can start applying this stuff. But yeah, so I feel kind of obligated to probably go back and just review everything. All right, just do a real quick rundown, right? So like I said before at the very beginning, we look at the specific asset we're looking at. In this case, we're looking at the NASDAQ. It's kind of laggy still, but it is what it is. This open interest line here, when we're looking at COT data, if we see a drop of open interest from 8 to 12%, okay, 8 to 12%, that's going to, or 8 to 15%, my bad. That's going to constitute smart money lessening their short positions. When you see open interest drop like this, it's even more apparent when you know, this COT line is above the zero line. Okay, so when it's above the zero line, and do we have a drop in open interest, and we look at the chart and it's pushing lower into a discount array at a time where maybe there's a bullish seasonal tendency, that is a dandy. Okay, that is like such a loaded deal for bullish price action. Okay, I hope that made sense. Okay, so a drop in open interest while COT, and this purple line is open interest, by the way, for those of you that don't understand yet. So it's drop in open interest with the COT line above the zero line, dropping into a discount array at a time where there's a potential bullish seasonal tendency. Even if there's no bullish seasonal tendency, okay, let's just say if there's no bullish seasonal tendency, but we still see this stuff occurring. Discount array, drop in open interest from 8 to 15%, while COT line is above the zero line, that is a bullish sign by itself. But you add these other things like seasonal tendencies on it, man, it is fucking amazing. You know what I mean? So definitely hope y'all wrote that down or rewatch this and then put it on something, because that shit is super useful. But sometimes you can see, you know, if it doesn't make sense, say it's dropping open interest and shit's already below the zero line still, okay, that's questionable. So then we would have to rely on different things. But we still see this open interest dropped at least 8 to 15%. Okay, so with that being the case, by itself, that's showing smart money is unwilling to hold short positions in this moment. They are lessening shorts. Okay, they're lessening their shorts here. So if this line doesn't line up with that, right, because it did push down to a discount array, so you got a discount array here being the low, and also there's a fair value gap on the weekly chart over here as well. So with that dropping into a discount with a drop of open interest, you can take those two things, look at seasonal tendencies, and you can also look at the interest rate market and see what they're doing. Do they promote bullishness? To add on to the drop to a discount, a drop in open interest, okay, and then, you know, disregard this, okay? So you just couple those things together and then you get an idea of what to possibly anticipate. It's not a be all end all, right? You have to look at the chart. If this ran sell side liquidity, what did it do? Oh, God damn it. Sorry about that. Hold up. Come on. It doesn't want me giving y'all the sauce, yo. It's like, hey, slow down. But yeah, so you see the drop in open interest. You see a drop below sell side liquidity, which is a discount array, at a time where from June to August, it is a potential bullish seasonal tendency on the NASDAQ, which we just looked at. Remember, all three of those lines on the seasonal chart were bullish for NASDAQ from June to August. From the DXY's perspective, it was bearish from June to August. So we couple those together as a relationship: bullish NASDAQ seasonal tendency, bearish DXY seasonal tendency, at a time where we ran liquidity. And guess what happened? Knowing the piece of information I just told you, when you see a shift in market structure bullish here, it's reasonable to anticipate this is what we would have seen. On the weekly chart, okay? On the weekly chart, this run higher here, there was a fair value gap on the weekly chart up here, okay? So from this high to that low, oh God dang it. I don't know why this shit is tripping the fuck out today. Another ad don't want to go away. Jesus. Are you fucking serious, yo? Oh man. All right. Let's try to reload this. God damn, yo.
Bro, you need that new Wi-Fi and you need that new camera. Still ain't got the new camera yet.
Yeah, man, I know. Dude. It's been fucking months. I don't know. I'm just gonna.
It's
I'm gonna
been
hop.
years,
I'm gonna hop
honestly,
on
bro.
fucking Amazon. I'm gonna hop on Amazon
Yeah.
wherever we get. Or actually, I'll do it fucking right now, dude. I'd be always saying that, and fucking forgetting, dude.
Oh no, it's been years, bro.
Yeah, it's been literally like a year already. All right, let's try to load this up too. Maybe I got too much shit going. All right, pop this right back. But yeah, so bullish seasonal tendency, like we were saying, from June to August on NASDAQ. Bearish seasonal tendency for DXY from June to August. Okay. We see a discount array being punched into. Also, there's a higher time frame fair value gap over here as well. The price, it's a fair value gap. The price fell lower into. So it's 2 discount arrays that are significant at a time where there's a big drop in open interest. While seasonal tendencies are bullish for NASDAQ and bearish for DXY. Then after price ran out the sell side liquidity, it also shot higher, shifting market structure here. And then you can see this move occurring. What was this move doing? Like, why did this go higher? Besides all the fundamentals here, or in confluence with these fundamental drivers, right? What was this whole move higher doing? Well, on the weekly chart, from this high to that low, that's optimal trade entry, taking buy side liquidity or a short-term high on the weekly chart, okay, into a fair value gap. So it rallied to a premium to take buy side liquidity to then offer sells to smart money at a higher price on that weekly chart. So then what occurred? Once it got up here to this optimal trade entry level from this high to that low, I'll let y'all go do the check, right? From this high to that low, I could eyeball it and tell you that that is absolutely in a premium, okay, from this high to that low. Use the weekly chart to view this, right? This is more candles, so it looks like it's a lot more noisy. But if you go to the weekly chart, there's a little bit of candles. There's one high here. There's like 4 candles here, just a short-term high, and it ran the high into a fair value gap at a premium. And then what did price do once it got up here to the premium price level from this high to that low? Price ended up shifting market structure on the daily, leaving a fair value gap after taking buy side liquidity. Here's the YouTube model, okay? With the underlying context that we have been discussing, okay? Overall higher time frame bias or just overall sentiment in indices is bearish. So this is a suspect rally. That's why the context we just discussed was very important from the weekly chart, because from this high to that low, this is just a fucking retracement to a premium, taking buy side liquidity. After it did that on the weekly chart, you drop down to the daily, you can see how price aggressively shifted market structure here. At a time when there's hiked interest rates, okay, you don't see no drops in interest here, right? Drops in open interest here, okay? There's, conflicting shit going on up in here, right? Because there's a drop in open interest there. We're above the 0 line, and it was not having it. And this is being disrespected because of the geopolitical factors, right? There's interest rates that are hiking, an extremely strong dollar. So some of the readings aren't going to be 100% accurate. And you have to be able to be flexible with it and see what price is delivering to you. Because if the price action's not aligning with the signals you're looking at fundamentally, then there's something going on, right? And you have to be calm, right? And if you take a loss, you need to chill. Don't second guess the shit you're trying to learn or stuff you're doing analysis on. Look at where you may have missed something, or the market could just be acting in the way it wants to act, right? And it's following geopolitical shit, okay? And there's more bullish seasonal tendencies as well going throughout the year, right? So this bullish rally here isn't surprising. Because if we go back to fucking, if it doesn't shut shit down again, if we go back over to here from October to December, it is just nothing but up, baby. Like nothing but up. But you could see towards, going into November with October, the end of October, there is a big drop, right? Bearish sentiment, overall bullish trend, but bearish sentiment up in here. So that is a strong bearish seasonal tendency from mid to the end of October, going into November. And then going into Christmas, we're bullish because of all the funds that get spent and all that shit, right? So it stimulates the economy and stuff like that. So, you could see, right? But you could see this little drop there, right? So it's not surprising that, we saw some continued bearishness, right? But it's also not surprising that we are also seeing a little bit of a bounce, because overall from damn near August or the end of September to December, there's like a heavy bullishness going on. There's some slight dips, which are noteworthy because there's significant lows that form around these times, right? So significant low there towards the end of October, going into November, right? And then there's all three of them dipping down. So those are significant, but overall, right, you can see how strong the bullishness is. And that's noteworthy. That's things that you note and you sit there and study. You look at old data and you study. Yes, it takes fucking time. Seasonal tendency studies are also another thing that takes a while. But the more you put it off, the more you say, oh, I'll do it later, I don't feel like it, the longer your fucking journey becomes. The longer it takes for you to become good at this, the more you're going to have to deal with the rookie mistakes constantly. So it's, you just got to make the decision. Like, yeah, I'm going to study something. And that doesn't mean fucking hours a day. You could spend 1 hour a day on one topic every day. Be intentional. If you're intentional, like, hey, today I'm studying seasonal tendencies for an hour. Tomorrow I'm studying the model and what it did. Okay. And then each day, log what the daily range looked like. Where was your model? Was it there? Were you able to find it? If not, why? What do you think? What happened? Was it choppy? How was the day? You got to write these things down and do these things. Okay. And then, that's how you gain experience, because you can't magically become good at something because you want to become good at it. You know what I mean? Like we talked about earlier, you got to have experience with it, especially with this, because it's super technical, so you gotta just put your fucking thinking cap on, be like, you know what, I'm gonna fucking do this. I'm grabbing a hold of this shit and I'm not fucking letting go. And guess what? I'm gonna develop the discipline and fix whatever the fuck I gotta fix. And I'm gonna keep my head down and fucking just do this shit. I don't give a fuck what no one thinks. Doesn't matter, because they don't know what the fuck I know. Okay. And you just gotta handle business like that. Okay. So moving forward, right, with what we're looking at. Okay. Let's go back to the seasonal chart. Okay. So you could, like I was saying about the drops in open interest, right? Those are significant. So now when you're looking at COT data, right, just observe these things and look at the chart, what it did. Observe what the COT line did, right? Observe that. Take a screenshot and draw a box on each dip in open interest you see. Okay. And these are the settings for it. Daily nearby, 1 year. Okay. You want to have 1 year of data. All right. Daily nearby, you got to have this, because if you don't put this setting there, everything's all fucking chopped in a mess. Okay. And then, like I showed you earlier about the COT, just have the commercials highlighted. Don't have anything else. And you can, there's also another way for COT data for you to make this even more accurate for the zero line. You get the lowest low and the highest high from the last 12 months, and you split that in half, and that will be your real zero line. Because sometimes this zero line is shaky. Sometimes it's not as accurate as we want it to be. So that's that's why, every time you look at COT data, just look at the last 12 months, find the lowest low, highest high, draw a line on both, and then cut that in half. It doesn't have to be perfect, but when you do that, you'll be for sure. Sometimes it'll line up with the real zero line, and that means, it's solid. Sometimes it won't. Sometimes it'll be a little lower. Sometimes it'll be a little higher. You know what I mean? But that's something to think about as well with the COT data. Okay. And then again, before we move forward, sometimes things aren't going to make sense. And if they don't make sense, look at what does make sense. Okay. Like this dip in open interest, there's no way you can get that confused because look at the shit. It's there, it's visual. So a dip in open interest means that smart money is trying to lessen their shorts in that moment. And then with that information, you go look at seasonal tendencies. You can see what that's telling you. Then you look at the chart, see, you know, if there's a drop in open interest, there may be some bullishness coming. And if there's a bullish seasonal tendency, what would price want to do bullish, right? Like, why would it want to go bullish? Is there a narrative? Well, in this case, there was. From this high to that low, there was a fair value gap on the weekly. Short is a swing high here, which held buy stops. So they ran up to a premium, taking that, rebalancing an imbalance. It also rebalanced this here. There's even an imbalance here. I didn't even notice that. So it came up to there, ran out these equal highs here to a premium, and then shift the market structure continued lower. Okay. So yeah, I hope this stuff is crystal clear. If it's not, understand that it's probably just an experience thing. Okay, because this doesn't take that long to do. It's just taking a long time right now because, you know, I've been dipping in and out of other things as well, but it doesn't take that long. And even if you dedicate one day to do this, hey, I'm going to do my fundamental analysis today because that's all the time you have. Maybe you only have an hour, maybe you only have 30 minutes. That's okay. Like, what's the problem in that? As long as you're doing it, you're building experience, and you may not have the results you want right now. You know, you may not be where you want to be with trading. You know, there may be other shit around that, you know, you wish you could change right now. And, you know, shit just takes time. But that doesn't mean you start beating yourself up if you do something wrong, because this industry is not, it's not the place to do that at, because it's not valid because of, remember what I said earlier. And if you're going to do this for 5 years, even just 5 years, even 3 years, if you're just going to do it for that chunk of time and you're maybe in your first year and you took a loss and now you're beating the shit out of yourself mentally, but you have 2 more years until you stop, or 5 years or 10 years until you stop, that one day doesn't fucking matter. That one experience you had, it doesn't matter. The only time it matters is if you over leverage and do some irresponsible shit, but you have to conduct yourself responsibly. Don't be a gambler. Although this is a form of that, it's not entirely that. It's something totally different. There's different things.
Yeah, I don't look at it like gambling anymore, though. I definitely don't look at it like gambling. I appreciate the knowledge that the professional sports gamblers gave me when it came to like risk management and understanding the details, you know, understanding the game. You feel me? Like,
yeah, there's a lot of people that they're just gamblers, though. You know what I mean?
Yeah, no, facts. I mean, even with trading too, you know what I'm saying?
Yeah, like think about it, bro. If people come in here and they're brand spanking new and they go in and they're trying to push buttons and do live trades, they're already gambling and they don't even know it. They think the excitement from watching an ICT video has made them a fucking juggernaut. Oh, I know the secrets. And then they go in and they get fucking slapped in the face. You know what I mean? So I'm making sure that perspective is looked at as irresponsible. You know what I mean? And if any of you guys that watch this on the replay, if any of you guys are less than a year or 2 or 3, you need to think about your expectations. Lighten the load on yourself. Okay. Yeah, there's a bunch of shit going on. Yeah, fucking all this crazy shit. But dude, you freaking the fuck out, putting all that pressure on yourself, that's not doing any benefit for you. It's just going to damage everything. It's going to make it harder to do this. It's going to make you deal with shit that you don't want to fucking deal with personally, in your mind, mentally, financially. It's just not worth it. Take your fucking time. Beat up a demo. Okay. Beat this shit out of a demo for 6 months. If you can prove it to yourself and you have a process that is clear, that you can explain to someone that trades this style, ICT stuff, if you can sit there and explain your process to someone and it makes sense and you're able to prove it for 6 months to yourself on a demo, then you're ready for FTMO. Then you're ready for live trading in a personal live account. But without that prerequisite, nobody's ready, and they should not be buying fucking challenges at all. Period. And if they do, I mean, it's on them. They're going to have to learn, because I had to learn. I had to learn. I did that. I had that mindset, and it was fucking painful. Yeah, it was painful. I still think about it, and it's still painful. like fuck, dude. And that's aside from losing 12 bands, like in the first year. Like it was bad, bro. It was bad. And then I lost like maybe 6 challenges first, like before I even like really was able to get a grip of shit and understand what's required to be a funded trader by itself. And in that process, I was able to understand what it takes, what is required for you to be a profitable trader in general. And that is mastering your psychology, mastering and having a massive importance on risk management, okay, and understanding your model, okay, and focusing on that and your technicals, right? That's all in the model, in the technical side, okay. So those are 3 pillars that I tell everybody that crosses paths with me with this shit, because every problem you stumble across will be related to one of those things. Every problem, it's either a technical problem, it's either a psychological problem, or it is a it's a technical, psychological. Well, what was the third one I said? I'm running blank right now. I be saying this shit all the time too.
Risk management.
Risk management. See, most important thing, blanked on, yeah. Yeah, Fotis has heard me say this too multiple times, but man,
all the time.
But yeah, those 3 pillars, any problem you run across or face, they're gonna fall in line with one of those things, or one of those categories of shit. And if it doesn't, and it has to do with even personal life. I mean, even personal life affects your psychology. So everything, even personal problems and shit we deal with at work, or shit, anything in just life, that affects your psychology. So it falls into that category. And if you can label have your groundwork laid like that and see, okay, there's these 3 things, it helps you start narrowing down your problems, where your weaknesses are. It starts making it have more context, like, okay, this is what that is. And, how am I going to work to fix that? And then you got to brainstorm. You got to sit with those uncomfortable emotions, those uncomfortable feelings. You can't just blow past them. Like if you take a loss, 2 losses, 3 losses, have a shitty ass day, maybe you blow your account. Like you can't just be like, all right, well, fuck it, I'm just going to do this the next day, and I'm just going to move on. I'm just going to buy another challenge, and I'm just going to do it tomorrow. I'm just going to do it next week. I'm just going to do it. I got it, bro. Like I just over traded and over leveraged. I won't do it this time. That's not enough. Like you can tell yourself that all day long. If you don't have a process that you're loyal to, that you've practiced in a demo, that shit's going to seep in. And a lack of experience and a lack of discipline, that's going to be the reason also. Or unrealistic expectations, right? All these things, there's reasons things happen. People don't over leverage just because they want to over leverage. Like there's a reason. You're wanting to get to your goals. You are lacking discipline. You are this, or you're lacking that, or this or that, whatever the case may be. There's reasoning to it, why it's happening. It's not just I over leverage, so okay, I'm just gonna put more money in. Like that's why this shit's gonna keep happening. Because you don't want to sit with that emotion. Like you don't want to sit there and view that shit. Like, okay, that's what I'm doing. How am I gonna work past this? I'm not a shitty trader because I over leveraged. I just have a lack of discipline, and I need to work on that. And you got to admit it to yourself. You have to admit these things, because if you don't admit it, because the first solution to fixing or the first prerequisite to fixing a personal problem, or just any problem in general, you have to acknowledge that it is a problem first. Because if you don't acknowledge it as a problem, you're not going to kick into the solution mode. You're just going to keep fucking avoiding it. And then there's avoidance behaviors that become a habit. And then now you're in a fucking complicated psychological fucking war zone in your mind that you now are getting fucking destroyed by, and it's hard to come up with solutions when things get that deep. It's not impossible, right? But it's just harder. And so why make it harder on yourself? You know what I mean? Just accept these things. Be honest with yourself. Don't avoid the harsh feelings. You shouldn't even be feeling harsh anyways, because like I said earlier, you got a whole career ahead of you. Okay. Don't let nothing in the world bother the fact that that's a fact. Like there's a long, like the world's not going to blow up. Okay. Unless they drop nukes and shit, then we can start considering that. But other than that, right, like until that happens, don't think like that. Like think that there is a solution to every problem. Okay. And you just got to think through it, and you just got to focus on it and acknowledge it and just work on it. We're not perfect. We're not going to learn everything overnight. We're not going to fix habits and this and that overnight. It doesn't work that way. You know what I mean? So we just got to, we got to have our mind in the right place. We got to look at these things from the right perspective. And we just got to do the work that we know we got to do, no avoiding things. Okay. No beating yourself up. Just work. Just do the work. Do the work. Don't avoid it. Set time out, even if it's 20 minutes a day. As long as if you're doing it consistently, you can make a lot of progress 20 minutes a day, every single day, 365. Think about it. Do the math. Do the math and calculate how many hours that is that you put in. If it's even 20 minutes a day for 365 days, it's still a nice amount. So, and the more you put, the more progress you make. You know what I mean? So just some things to think about, right? Because the reason I like even diving into these types of things every single time we're on a call is because you can never have enough of this type of stuff, because a lot of times we flip the switch to autopilot and shit's just happening, and negative shit's happening on autopilot, and we can't fix it unless there's like a speed bump that reminds us, like a stop sign, like, hey, focus. Okay. Like, are you lost? Like, have you lost the drive? Right? Like, what has pushed you to not do the work when things at the very beginning were so enthusiastic? What happened? These are also things you got to acknowledge and sit with and think about, like, really have a conversation about this stuff to yourself. You know what I mean? It'll give you nothing but positive effects, unless you're just beating the shit out of yourself mentally, right? But that's already a problem in itself. So that needs to be dealt with if that is the case, It shouldn't be, right? Like we've been talking about, but yeah. I hope you guys got value from some of the things that I've been saying, because very, very important, as always, right? But moving on, right? I hope all this COT explanation of certain things makes sense. It might make more sense, or it will make more sense eventually. Okay, when you do your research on it and stuff like that. And of course, any of you guys that do decide to spend time studying these things, just you got to let me know, right? Let me know. Send me examples. Send me what you see. Remember, open interest. If there's a drop in open interest, okay, there's a drop in open interest by itself. It's showing potential lessening of shorts. Okay, it's a potential lessening of shorts here. All right. Couple that with, something like this. If there's a drop in open interest from 5 to 15%, okay, if it drops and it is above the zero line, that is a bullish sign, especially if we're punching into a discount array at a time when there's a bullish seasonal tendency, potentially. Okay, that is a loaded deal. If there's a rise in open interest, okay, say it's rising, right? Like say it's got a rise up there, like boom, right? And there's no drop that occurs. If there's a rise in open interest and this is below the zero line, and maybe we're pushing into a premium array, okay, like it's running a high or running into a fair value gap or running into a bearish order block, and there's a bearish seasonal tendency, then that's a bearish sign. That's a loaded deal. That's a loaded bearish sign. If the price action agrees, and then that means basically it's pushing into a premium array at a time when it's a bearish seasonal tendency with a rise in open interest, while COT data is below the zero line, that is a bearish signal. Just like the reverse is true with the drop in open interest, when we're pushing into a discount array, while this COT line is above the 0 line. That is bullish, okay? Potentially bullish with bullish seasonal tendency, okay? So I hope that makes sense. That's like a little checklist for you to think about. And that's, that's pretty much, all there is to COT. There's other things that we can do, like we can do what I said earlier about draw this line out here from the most recent extreme low to the most recent extreme high within the last 12 months. You can cut that in half. And then if you cut the upper quadrant in half, if price is above the 0 line, you can start to see what hedging program the smart money is in on an intraday basis. Okay, like if we, like, for example, let's make this visual because that probably confused you guys. Right, so okay, let's say we draw this out here. I gotta change that color somehow. I don't even know how to change the color on that shit. What do I do it? Oh, there we go. Let's make that red. Make it large. Okay. So from this low to that high, eyeballing it, it looks like the 0 line is pretty damn accurate. Okay. So if we take that, and since this is the highest extreme, because remember we labeled the highest extreme. Shit. We labeled the highest extreme in the last 12 months and the lowest extreme in the last 12 months. And then that gave us our 0 line, splitting that in half, okay? So from this, God damn it, why is it? Okay. So from this high is the highest extreme from the last 12 months. This low is the lowest extreme. So having that, this is our 0 line, okay? But let's deal with this upper quadrant. If the commitment of traders line is above the 0 line, okay? If it's above the 0 line and we have our extremes outlined, we can work with this quadrant up here. What do we do with that? Well, to figure out what their hedging program is based on ICT's commitment of traders teaching and his mentorship stuff, you split that upper quadrant in half, okay? If we're above the 0 line. If we're below the 0 line, we split the lower portion in half, okay? And we remember what I was saying earlier about the open interest, okay? We always keep that in mind, all right? But doing this, being able to split this in half, when we're above the 0 line, I don't know why this keeps doing this, making it hella rough. Fucking change the color. Let's just go with, can I go with black? That work? Yeah, that works. So we have the highest extreme, the lowest extreme. Since price is above the 0 line, we use the upper quadrant. We split that in half. Okay, and now this is our new 0 line. Okay. So if price is above this half portion of the 0 line, we are in a buy program. Okay. Once it gets to below that, we're now in a sell program from the commitment of traders report. Okay. Once we get below this 0 line that we outlined from the highest extreme and the lowest extreme, now we would switch the quadrant. Okay, we would switch it down there and work with the lower portion of things, split that in half and have the same process. If it's above, that's a buy program. If it's below, that's a sell program. It's not a be all end all. Like none of this stuff is a be all end all, but it is assistance in being able to read this stuff better, to trust your analysis on it, because this is how it works. Okay, and you'll see, as you study, that's how you build the trust. Because me showing you this and showing you how I trust it and all that stuff, it's not going to build your trust. That's why backtesting is so important. That's why I'm so heavy on this shit. And I'm like, dude, you can't make no excuses. because I can show you every single day how much I trust this stuff, how confident I am in this, all that stuff, but that's not going to do shit for you. I could show you live trades. I could do all this shit, run up accounts in front of people. That's not going to do nothing for you. Just like ICT says, you have to go in and study this stuff. You have to. It may be cool to see it and, get motivated and all that shit. Motivation fades, but dedication and intention behind a specific goal that you're passionate about, man, nothing beats that. Nothing beats the dedication that's put behind that. Nothing at all. Okay. So yeah, so if we're above the zero line, just to review, if we're above the zero line, if you have your extreme from the last 12 months is this high, that low. If we're above the zero line, we could split that upper portion. And if price is above that upper portion line there, that 50% level of this quadrant, we're in a buy program. Okay. Price got into a buy program down right up in here. Okay. As it shot up, hit this middle line there, that's when it started giving us the buy program signal, right? But we already saw that though. We were above the zero line. Okay. Price bounced above the zero line after this happened, this drop in open interest. Boom, right there, as we're above that zero line, after price took the sell side liquidity in a bullish, potential bullish seasonal tendency, if that was applicable, then we would have been able to be confident in this. But for this, there was no bullish seasonal tendency. But guess what? Interest rate markets were declining at this time. Okay, slightly. It wasn't intense, but that small decline before the big ass rally in interest rates after the announcement, that's what presented this rally. Okay, and this was also a higher time frame rebalance as well, from this high to that low. Optimal trade entry from that high, this high to that low. Okay, so I hope that made sense. I hope I didn't lose y'all, and I hope I don't lose any of you guys in the like review of this. But if I do, as always, right, let me know. But everything I just taught you here, it's applicable to the lower quadrant if we're below the zero line. Okay, you split that in half, right? You get your widest extreme. Okay, you get your widest extreme. This is the zero line. Okay, then you split that in half. Now that's our new zero line to work with. It doesn't have to be perfect, right? But somewhere close. Okay. And when price is below, that means we're in a sell program. And what do you see price doing up at the top? It's selling off, right? And then when price gets above that zero line, what happens? It's rallying a little bit, right? There was a little bit of chop in there. But once price gets above this zero line up here, now we have to shift things. We have to shift things if it makes sense, right? Doing this wouldn't have made sense, right? But if this was all the data we had to work with, I mean, we'd have to scroll back, right? We'd have to see where's the last 12 months from here. Okay, so that would have been up here, and that would have been down there. So the zero line would have been somewhere in there. Okay, and then if this data was what we were working with, right, that's what we would have to cut it in half there. Okay, hope that didn't confuse you, right? I understand how that could have confused you, but this is just previous data, right? But yeah, so I hope that made sense, right? In a nutshell, right, when you're doing this analysis here, which we'll do this live one right now for what we're looking at right now. So the last 12 months, this is the highest extreme, this is the lowest extreme. Okay, we're above the zero line. All right, so what are we going to do? We're going to move this up, and we're going to move this to where it was. Okay, so it was like right up in there. That's where our zero line was. So we're below the zero line here. So price is showing that we may potentially kick back into a sell program, but we have a lot of bullish seasonal tendencies. Okay, price broke this swing high, so we got to wait for more information. Price has just been chopping back and forth. Okay, price has been chopping back and forth. We see we're below the zero line, so we could be leaning towards more bearishness occurring, and geopolitical shit is going on. Nothing is showing bullishness for any indices, any stocks, anything. It's all bearish. Recession's coming for the United States. It's all negative shit right now. So we're not going to see a big ass rally come up and attack these highs or attack this high. I don't think that's the case. The highest I see this going is potentially to this fair value gap. But I don't even think it's going to reach there because we have these consecutive down candles. That is a monthly or weekly order block. Okay, draw that out in time. That's going to be a level of interest for a reaction because it'll, this move here, if it takes this high stronger, I mean, it could just be doing something like this, right? Take the high, then continue, right? It could take the high to a fair value gap or to a premium from this high to that low to continue lower. COT data is below the zero line of this upper quadrant. So we're in a sell program, okay? There's no drop in open interest to work with. There's no rise in open interest to work with. Although this looks like it's rising a little bit, right? You could see it's at 8 now or 20. I don't like how it doesn't show me exactly where it's at right there. I don't really like that. That's kind of weird. Oh, it shows me up here. Okay, so it was 7, or no, wait, that's like 280. I don't know which one it's like showing me, to be honest. I don't really know which one's showing me what. Because look, it changes color sometimes. Like, that's hella weird. Yeah, that's weird. I gotta look into that. Kind of see what the fuck, because no one's ever explained this. ICT's never even talked about these numbers here. I just be going off of this over here. But yeah, if this was 27 and now we're at 28, that's not that significant of an open interest rise. But nonetheless, if that's not usable, just like this, if this isn't usable, we use this, okay, analyze this. If this isn't usable, we analyze this and couple it with the other fundamental things that we do. We look at, like I said, seasonal tendencies, interest rate markets, and then you can even just do like higher time frame intermarket relationships as well. That type of analysis, right? And just look at the world, right? That's also helpful. Okay, and then you relate that to price. Okay, we've been bearish. Nothing bullish is overall for longer term. So this, I don't look at this as a sustained low. I look at this as, okay, there's sell side liquidity. We're probably just bouncing up to take buy side, stop out anybody that was selling, and then it will likely continue to go lower. Okay, and we're looking at fundamentals to try to give us that information. Here's our first signal here for possible bearishness. We now got down below this zero line. So if we see a rise in open interest, something sweet, right? Something like this, if it rises higher, that would be nice because now we're below the zero line. If we get a rise in open interest, that's bearish. And then seasonal tendencies going into November. Remember, we saw that little dip, we saw that little dip up here going into November. Boom, that could be influential, right? COT data is beginning to show us that, right? It's beginning to show us signs of that right here, right? So yeah, there's probably a lot of information that I just dumped on y'all, but I hope it's visual enough because I like to see things visually. And I hope this was visual enough. I hope I gave y'all like a little, at least enough for like a little checklist and like a perspective on the intention you should have when you go in and study this stuff. And just a way to practice, right? Just to look at things. And when you're looking at COT, you're not just like lost. And that might happen for a little bit. But the more you do it, the easier it'll become, okay? But yeah, so that's about it for commitment of traders. That is literally everything you can possibly know that ICT is taught about how to analyze the data. At least, that's what I've interpreted and it's worked well for me. You may draw your own conclusions, but this is what I do when I'm viewing COT, and a lot of times it serves me well. So yeah, I hope that was hope it was helpful. So yeah, let's move on to some real time price action here, okay? Or some real, you know, nitty gritty, what's potentially going to fucking happen, right? So remember what I was saying earlier, while we looked at this, okay, price is rallying here. This is the daily chart, right? It's a daily chart. Price is approaching this high. Remember what I said, there's a fair value gap over here, okay? Let's go look at the weekly chart, okay? We're on the weekly. So there's this little fair value gap here. There's still a little bit of a gap there. It's small, but it's still there, okay? So price could reach up into that. If it doesn't reach into that, guess what? There's a gap in here. And there's also this order block here. There's also these consecutive up candles, which start here. So this whole area from this high to that order block here, that's where I'm anticipating us potentially seeing a continued move lower. On the context that this is just a run lower to retrace back to a premium from this high to that low, to then come and attack deeper sell side liquidity. Okay. If this high breaks, I'm no longer bearish. Okay. Because now that would be 1, 2 swing highs broken, and we would likely chase these highs. The likelihood of that being taken, I believe, is not very high based on what's happening in the world. If it gets taken, cool, we just adjust. But if it doesn't, I see this low being taken after price goes somewhere up here, right? Of course, the first liquidity pools are going to be the lows, right? Each daily candle has a low, okay, and that's liquidity. So if we get above here, mind you, look what it set up last week. You think that's random? There's a fair value gap here as well on the daily chart. You think that's random? Right above equal highs. Price stopped right before it. Last week, price was here. I didn't send it in the chat, but I had it written down that price would likely come up here and gap above there. It did that. Let me see if I can go pull that up in my journal. I have that shit in my journal from like last week. Oh, was this last week? Oh wait. I think, oh wait, that was literally last week. Hold on. Oh, right here. Yeah, we're gonna even look at the times too, so you could see that this was for surely before the fact. October 25th. Okay, that was, I believe, wait, October 25th. Let's go see. Okay, October 25th was when I took the screenshot. All right. Oh wait, that's this screenshot. That's the wrong one. Whoops. October 23rd. That is Sunday. That's last Sunday before the market opened. Will price gap up here to take the high? Let's find out. Boom. Isn't that amazing? That's something, huh? You see it. It was October 21st or 23rd. That's a Sunday. Go look it up on the calendar. That's a Sunday. And I had it written out. I'm like, will it gap up here to take the highs? And look at the monthly order blocks there. What did it do? Gap right to it. Literally gapped right through it. Just like I thought it would. Came right to where? Monthly order block. And then did what? Retraced. Boom. See? So just want to prove that, right? Because I don't like saying shit and not having proof behind it, right? But yeah, so what do you think is going to happen here? Okay, we could see price rally there. I mean, that might be a little bit too much of a gap. That's like almost 200 points to get from, that's like 130 points. It could do it. I guess nobody's saying that it can't. right? But these are equal highs, and there's a fair value gap there. So guess what? This is what I'm aiming for. This is what I'm watching. Okay. That's what I'm watching. We're above equal highs. That would be perfect for them to pierce through, create a high of the week, and then just start attacking these equal lows down here. Okay. So we draw that out. We saw in the weekly chart why this would be a potentially good idea as well. COT data is showing us a potential sell program with this upper quadrant from the extreme low to extreme high. Cut that shit in half. If we're above it, that's a buy program. You can see what happened. Look, it rallied. On the lower time frame, there was probably a market maker buy model in there. Okay. And then once we got below it, now we're in a potential sell program, but they're retracing back. What's the narrative? They're retracing back to take buy stops. They took external liquidity. So what do they got to do? They got to run back and take internal liquidity, offer smart money a premium on the higher time frame to then continue selling off. They can't just sell off and just keep going. They need counterparty. How do they get counterparty? They set it up by doing this, by taking liquidity, rebalancing to another form of liquidity, get counterparties thinking price is going to go one way, then they send it the other way. But it's at logical levels. What logical levels would that be? From this high to that low? Above that, above 50% is a premium. What's above that 50% level? From this high to that low? Well, there's a fair value gap right smack dab in the premium price level, above equal highs, at a time now when there's a potential sell scenario. It doesn't really agree. It does agree with seasonal tendency as well. As we saw earlier, there's right at the beginning of November, there's a start of a heavy bearish seasonal tendency. So with that being the case, I think we have a pretty solidified understanding of just with this information that we've talked about, of why fundamentally we should be looking for bearish price levels around these highs. Above these highs, we're wanting to see what the reaction is going to be. Is this fair value gap going to act as resistance at a premium price level for us to then attack equal lows after these equal highs get purged? Is there going to be a high of the week that forms above these and then it potentially sells off? Like, we can start really playing pictures of how the weekly range should look, right? Like, we want to see this possibly gap higher into that area. Monday going into Tuesday, potentially see a reversal lower to then attack these equal lows. These are too perfect. Where would the logical launching point be? At a premium price level from this high to that low. What lines up with that? Here, let's pull the fib out just to even make, get even more clarity. I don't like this fib on here, but whatever, we'll work with it. I did it backwards. Wait a minute. Damn, yeah, that shit's like really weird. Yeah, see, 50% is right above that. From this 50% to the 61%, that's the zone right there. It's what, 62% retracement level, that's optimal trade entry. Doesn't matter. Anything above 50%, guess what? From 50% to 61 or to 62, that's optimal trade entry. Even up into, these levels up here. But remember what I said? If this high is broken, we're no longer bearish. This is going to be a significant break in market structure if it comes up here. This run on this swing high here, that's just a shift in market structure for a higher time frame retracement within this range here. So it's bouncing up, created equal highs. There's shift in market structure here. It's rallying higher because it's following the higher time frame direction and trend. That's why the higher time frame is so important, because if you're working on those lower time frame charts, you got to understand what the fuck is going on those higher time frames, so you can make sure you're on the right side of the market and you can understand narrative. Because if you don't understand the higher time frame, it's going to be very, very difficult for you to understand the lower time frame and why it's doing certain shit. Why is it going to certain levels? Like, you won't know that if you don't understand how to analyze these higher time frame charts. If you understand fundamentals, it further amplifies your trust in whatever bias you're looking at. Okay. So we got these equal highs here. I believe price is going to come up and hit this fair value gap in there. May punch a little higher, but look at the 61%. 61.8, 62% retracement level. Look at exactly what it lines up with. Isn't that ironic? These consecutive up candles. What is that? That's a weekly order block from this low, the open, draw it out in time. That's an optimal trade entry, 62% retracement level. Like perfect. In line with a fair value gap on the daily chart that's down here, as well as the weekly fair value gap that's in there as well, and this gap up here, and this order block with these consecutive down candles from this open. So remember, I said from this order block on the weekly to these highs, that is a sell area that we're looking for our model, or whatever model we use, to shine. Okay, so that's my perspective. That is what I am looking for in NASDAQ. As always, you never see me drop down on the weekends or weekend prep calls. I never drop down to the lower time frame, because what's the fucking point? I'm not going to entice myself or excite myself to try to get into a trade. It's just not going to work. I'm not going to do it, because my trading plan says no trading Sunday. So it's all preparation. Sunday, sometimes even Monday, it's preparation. And then Tuesday comes, and then we fucking remove its head. You know what I mean? So, yeah. So I hope that makes sense. I hope it was crystal clear. I definitely tried my best to keep it as simple as possible. Speak in terms that y'all understand or can understand. If there's any confusion, always, let me know. Right? Anything that I've said, if it confuses you, just let me know. And I appreciate you guys for, hanging out with me and, listening to my ass talk, because I love talking about this shit. You know what I mean? It's just fascinating to me, and we can make money from it. You know what I mean? So every conversation's worth it. So yeah, so I hope the bias makes sense for this. We got one more thing to do. Hell yeah, bro. I'm glad. I'm glad, man. I love talking with y'all, for real. But yeah, so we got one more thing to monitor here. Okay, it's the DXY. All right. So hey man, you already know me. I always got to rant about something, yo. Shit, ICT damn near put that in me, bro. I be thinking about all kinds of shit, like, dude, so it's got to come out for real. But it's, it's all valid points from my perspective, at least. Right. But yeah, so let's kind of dive into DXY. Okay. So we're looking for potential bearishness to potentially happen on the NASDAQ. Okay, we're looking for it to punch higher and then continue lower. All right, and just keep its higher time frame bias and direction going, because there's nothing bullish about anything right now. And we may be wrong, and if we're wrong, it is what it is. We adjust, and the process, starts over. But since we're bearish on DXY, or since we're bearish on indexes, or we're expecting bearishness, we want to see if there's something that can align with DXY. Okay, so we see what DXY is doing here. It's the daily chart. We see price is rallying higher. There's a fair value gap in there. You see, I have this stuff. And let me see if I can. how do I get this thing to go small? Just like decided to, hell yeah, bro. Hell yeah. Let's see if it'll, right click on this thing. I don't know. Whatever, it's all good. All right. So yeah, since we're bearish on indexes, we need to look and see what the hell's going on here, right? So there's a consolidation there. So I see this as a market maker sell model, or market maker buy model, I mean. Okay, so we have a smart money reversal at a logical level. So this is where the consolidation started. Okay, we can see how price ran lower, consolidated to round up more sells, drop down one more time, kind of fucking, you know, took stops. This is a 3 drive pattern, reversal pattern in a bearish market, right? So it drove to close in the full gap here, fair value gap, and then it poured lower again, right? And what did it pour lower into? What did price stop at, right? And then react hard away from. We reacted away from this weekly order block here. Okay, so this is a weekly order block. I'll leave it to you to go onto the weekly chart to do your own visuals on that, because it'll be more beneficial, right, for you to see it and then hear what I'm saying. But yeah, so I'm anticipating this as our potential framework. So the fact that we're over here, okay, we're building up liquidity right here. There's equal highs there as well. So just like on NASDAQ, how there's equal lows, okay, there's equal lows over here. Right here, see this? There's equal lows there and there's equal highs, okay? So we're looking for the equal highs to be ran potentially and then have it attack these equal lows. So DXY, we could see DXY attack these lows first, sending the indices higher, and then come and attack these equal highs, and eventually come and attack these equal highs as well. And then eventually these equal highs as well. So we have near-term liquidity targets and framework on the DXY for bullishness. And we also have longer-term targets as well. And then we also have NASDAQ targets as well. We have these equal lows here after this run on these buy stops, because there's a lot of buy stops up there. So counterparty to smart money, if they ram through that, okay, there's plenty of money up there for them to have a counterparty to their sells if they're going to sell and continue this drop lower after priming the stage with these equal lows as well and these equal highs as well. So they're going to punch up there, stop out any of these people who think shit's happening, right, or they're winning or whatever, potentially come up into this fair value gap on the daily and on the weekly. And then we're potentially, potentially looking for a high to get created, and then boom, come and attack down here. At the same time, have DXY give us a rally, attack these highs, these equal highs, and then eventually these equal highs as well. Okay, all starting from this drop lower to take out sell side liquidity that also ran into a weekly discount array. They're hiking interest rates again in November. It's coming up soon. So this is setting the stage. Plus we see a sell signature in the COT data that's below that zero line, remember? And then we also have the bearish seasonal tendency for the NASDAQ, okay? So that's all leading to bearishness on indices, bullish DXY, fundamentally, okay? Not just me, I think it's gonna be. No, that's not enough. There's things behind me with what I'm saying, which is why my bias, I trust the shit out of it. I trust this is gonna happen. And if it doesn't happen, quite frankly, I might be a little surprised. But that doesn't stop the fact that I will get back in line. But honestly, I see this shit going lower on indices. Just for the simple fact of interest rates getting hiked another 0.75%. Like that's coming. Whenever the hell they're gonna do this shit, federal fund rate. There it is. It's coming next fucking week. They're raising the interest rates again this day, next Wednesday, or this Wednesday coming up. So there's your ticket right there. It's coming very soon. And we got non-farm payroll. So all this shit's gonna shake the fucking shit out of the marketplace. But I believe what we are looking at, what we discussed today, that's what's gonna come to fruition based on all the shit that we're gonna see. Fundamentally, technically, all the shit's in alignment, okay? With bullish DXY and bearish indexes. Okay? So that's gonna basically bring this session to a close. I know it was a fairly long one. And again, I appreciate you guys hanging out and just listening to what I have to say. I hope I was able to give y'all some, motivation or, reality check if that's what was needed. And just, right perspective and, just some gems to start studying and apply to your business of trading. Okay. But yeah, if you guys have any questions or anything before we head out, I'd be happy to knock some of those out. But if not, again, you guys, I really appreciate you hanging out. And yeah, it's all love.
Appreciate you, my guy. Appreciate you.
Yeah, man.
Hey, real quick on that, on NASDAQ though, you don't think that it's gonna go bullish a little bit though? Because with the seasonality report, what it's telling us, and if you look on the weekly on NASDAQ, you take it from the low from March of 2020 all the way to the high of November 21.
So
We're at like,
this is too far here. So from this high to this low,
yeah,
that's already been used. You're not going to use from this high to that low.
No, I'm talking about from from all the way that bottom right there from like where 6,000.
So you're going to talk about
no, like
you're talking about from here to there.
Yeah.
So we've actually looked at that too. We already reached an optimal trade entry level down here.
Yeah. Oh, and that's what it reacted.
Actually, no. It was down here. But
yeah,
the only reason you need to really catch this fact here. Okay, the fact that the U.S. dollar and the American economy is pumping interest rates 0.75% every time they talk about shit. That is so absolutely detrimental to the stock market. I wouldn't be if they keep doing this. This shit's going to end up at 6,000.
Probably to balance it out, right?
Yeah, like it's unprecedented waters that we're swimming in right now. Like there's so much, like what people don't realize, the markets right now, the shit that we're learning, the shit that we've been engaged in the last 3 years, 2-3 years, bro, it's the hardest conditions any trader has ever faced, ever. So everything that we talked about in the earlier portion of this call, like psychology wise and just, everything that we talked about, it needs to be taken to heart from how serious you take this. Because dude, we are in more risky territory than ever before. That's not something to be scared of, because volatility, when shit's happening in the world, as a trader, that is fucking field day. Like we want that. Not that we want the world to suffer, right? But we want volatility. What brings volatility? Crazy ass fucking world events, news events, bad shit going on. Because when it's peace and prosperity, shit's just stagnant. It's just like regular. But in this crazy times, volatility is at an all-time high. And that is something we can take advantage of if we know how to operate and have the right perspective and processes in place. Okay. But to answer your question, thinking, do I think price may rally higher? Yeah, I think it may rally a little higher. If it breaks past this fair value gap, what could it aim for next? this gap here between this candle's low or this open or close here and this candle's open, if it breaks past this high, these two highs, and it breaks past this fair value gap, well, we can also look at this, right? I said from these highs to this order block, because from this high to that low, that is literally boxing out optimal trade entry. Watch, and I eyeballed that. See, from these highs, that's 50%. To this, okay, it's a little off, but nonetheless, I mean, look where this lines up, right? This lines up almost perfect to the open of that. So yeah, I mean, to answer your question, price could rally higher with the consideration that there's bullish seasonal tendency. That could be a possibility. But remember, going into November, there's that slight dip in all three of the averages that we were looking at. Okay. And it's bearish going into November specifically, right here. Going into November, 1, 2, 3, all three at the same time. That's a pretty steep drop that then creates a seasonal low to then rally higher. So this drop there, since we are in a bearish trend and everything is bearish across the board, bearishness is more significant than bullishness will be when we're looking at our analysis, because that's what the current times are telling us overall. Because these aren't, like I say about everything, they're not panaceas, right? This doesn't mean it has to be bullish or it has to be bearish. But when we're looking at the real life shit that's going on, what is the current market condition? Whatever that is, if we use seasonal tendencies to solidify certain things within that narrative of what's really going on, that's when seasonal tendency is fucking barn burner. Like, that shit is so accurate. And that's what we're doing right now. Since we're in a higher time frame bearish trend, geopolitical factors are fucking completely negative. Like, damn near throw the dollar in a fucking graveyard. Like, they're already talking about how bad
XRP.
Like, it is so bad. Like, and they're making it worse every day.
Fact.
Because that's a
You know, it's crazy too. Like, literally everybody that I talk to that has money or has some sort of investments, I always ask them, like, what do you think about XRP? Everyone always say that they love it. They love it. They always say that they have a lot of money invested in it. This one guy was telling me that he has over like 120 grand invested in XRP. Like, bro, XRP is shit is the truth, man.
Man, hey, I hope that man's, if he has that much, I hope he's ready for a long ride. Because I mean, it's gonna be very hectic until that shit ends. But I'm long-term bullish on that shit. I don't give a fuck what happens. I don't care what happens this year, in 2 years, in 3 years, 4 years, 5 years. I don't give a fuck, dude. I'm in this shit long-term because I'm part of history. Like Coach JV says, we're part of history with XRP. And no matter what happens, even if America doesn't utilize them, which they are, because Ripple already has ties with Bank of America. Okay, they already have patents, all kinds of patents with Bank of America, Visa, MasterCard, you name it. Like, they're already intertwined with the new banking system, period. Like, they're with the big players, so they're not fucking going nowhere. Like, so America not using them, I think, is pretty far out. I think it's out of the question, because they already are using them. So that's not even a conversation anymore. Like, are they going to use them or not? Yes, they are. They're already doing it, but they're not publicizing it like crazy. People like Coach JV have like dug this shit out and put it out there. So that's already known. And that's a good thing, right? So you pack your fucking bags, keep watching Coach JV, and keep studying what these things are that you're studying, that you're investing in. Because there's no reason for, like, if people go out and invest in, this is a huge mistake people make with crypto. Like, they go out, they hear everybody investing in it, and they're like, okay, I'm going to invest in it. But have they sat down and done a bunch of research on it? Have they done their own research? Don't be like the masses, bro, or just anybody, right? Don't be like the masses. Okay, like, do your own research. Yes, we trust certain individuals, and they got good information. They've been proven right and proven that their stuff's pretty damn accurate. But that doesn't mean we just totally take their advice and don't be free, independent thinkers. Because ICT, if he's taught me one massively important lesson. It was to be a independent thinker across the fucking board. Don't let nobody think for you. Don't let nobody tell you shit unless you back test it or just research it, right? Like, do your homework. What is XRP? What is Ripple? What the fuck is that company? What do they do? Why are they important? Right? Like, besides the ties with the government and all this other stuff, why are they important? What's the hype about? Because it's going to replace the dollar? Like, that's not enough. Like, that's not enough. The economy's dying. Oh, so we need something new. That's not enough. Why? Why are they the one? Why? And the answers you'll find are pretty significant. And that's why I am 100% behind XRP and
It's
all the other
fastest
companies.
and most efficient.
Exactly. Fastest, most efficient. And guess what? The big kicker here, they have been working
Most
with
secure.
regulators.
They can watch our transactions and everything. That's what they want.
That's
they want to be able to see our transactions.
That is a negative. I hate that. I hate the fact that that's the facts that's going to happen. That is the worst part about it.
They want to see it. They
want control. They want control.
Yeah.
They want to be able to shut your shit off whenever they want. And if you don't follow what the fuck their beliefs are, they want to shut you off. There's a whole conversation we can get in with how I feel about that shit. But
it's all good, bro. We're gonna be ready for that, though. You feel me?
Yeah, we're gonna be. Our bags are gonna be packed, and they can say what the fuck they want to say. I'm just stay in my lane how I have been. You know what I mean?
Hashtag.